Good afternoon. It's the 7th of February 2022, one day after Senegal won the Cup of Nations and became the champions of Africa. This is Markets Today and I'm your host, Odhiambo Ramogi. Today we are going to have a look at the tourism sector. Is there recovery there, and are we looking at better performance of the sector in the course of the year? We will be having this conversation in a few. But for now, let's have a look at how the market performed in the day. We'll start with the gainers of the day as we head towards the losers. Canned General recovered its losses from last week and increased 7.89% of value to close at 61.50. Williamson Tea was up 3.65% to close at 135 shillings. TransCentury went up 3.23% to close the day at 1 shilling 28 cents. Nairobi Business Ventures closed the day at 5 shillings 10 cents, having gone up 3.03%. Kenya Re also went up 2.25%, being the last in the list of the gainers to close the day at 2 shillings 27 cents. Let's have a look at the losers. TPS Serena, or TPS South Africa, depending on who you're talking to, shed off 8.79% to close the day at 14 shillings. Uchumi Supermarkets closed the day at 21 cents, being 4.55% lower. The KCB Group, Bank of Kigali Group, BK Group PLC, closed the day at 29.35, being 4.43% lower. Absa Group closed the day at 11 shillings and 90, being 4.20% lower. Eveready East Africa was the least loser at 4%, closing the day at 96 cents. Let's look at the big movers. Who's chilling with the big boys today? That is Safaricom PLC, traded 2.9 million shares. Equity Group Holdings traded 1.6 million shares. Kengen, that is Kengen, 219,000 shares. Absa, 197,000 shares. And Kenya Power and Lighting, 182,000 shares. It looks like Kengen is the only new entrant into this list. Kenya Power has been making some good waves in the course of last week. Well, good afternoon once again. We are having a look at the tourism sector and how it's performing over time. It's not surprised that TPS Serena is making headlines, although on all the negative points. To have this conversation, I'm joined by our resident analyst on securities, Willis Nalwenge, senior analyst at Kingdom Securities. Karibu sana.
Asante Ramogi.
Excellent. Start us off with perhaps an update of how the market performed and what your observations are of the same.
One thing we've noted is that Safaricom has picked up a few pointers here and there. We've seen that they've been on good news coming from Ethiopia, which has pushed the price up about 5%, making the whole market move on an upward trend. Equity Bank, we are waiting for positive news from that direction. Remember, the last 2 years we've been disappointed in terms of dividend. So the stock has moved from about 49 shillings at the beginning of this month, at the beginning of the year, to about 53 shillings as of last week Friday. So that's a positive news for that stock, and we expect it to edge a little bit upward towards March.
Are there expectations that there will be dividend there?
There's positive news. We're expecting positive news from Equity Bank, maybe 2 shillings 50 cents, which will be very good for the stockholders. KCB also another big movers. It's anybody, and you remember here when we were having this discussion in December, KCB was trading at about 44 shillings. Right now it's trading at about 47, 48 shillings. So anybody who listened to us during that time and going into the market must be smiling on the way to the bank. But unfortunately, I keep on seeing that the volumes have been down for the last 2 weeks. Unfortunately, that's not a good thing for the market. But we hope that during the week it will be able to turn around to post positive figures along the way.
Yeah.
Yes.
How is the market responding to the infrastructure bond that the CBK issued few days back?
The thing we've seen towards every time when the CBK issues a bond is that there's normally a slowdown in the secondary market, and especially if it's the infrastructure bond. What happened is that people tend to offload part of their portfolios. They are waiting for the infrastructure bond. Remember, infrastructure bond tends to be the favorite for foreign investors because of two things. Number one is the rate of return, and also it's tax free. So it's a very good response from that. So most of the time you'll see that even locals tend to follow what the foreigners do. So you're expecting very high subscription coming this week, with again a high level of acceptance by the government, considering that again they're targeting the dollar inflows into the country.
Yeah.
Yes.
The tourism sector, if we can just go to the elephant in the room, which is the tourism sector, has been touted as one of the most affected sector globally by the pandemic. When hotels closed, airlines were grounded, and no one could travel. Are we seeing a recovery in the country?
Positive news. Globally, we are up 4% globally, but unfortunately, when you look at these different areas globally, you'll note that unfortunately Africa has had the lowest tourism movement.
Well, when you say we are up 4%, are you meaning that we are up 4% in the stock markets, the counters there, or we are up 4% in terms of bed occupancy? We're
talking about global tourism. Tourism movement.
Okay.
So this is about spending movement globally.
All right.
So we've seen an uptick in the tourism sector. When you look at region, unfortunately, Africa has the lowest growth, about 12%. The other countries are posting 73%. Some countries are posting 24%. But basically, it's because about the restriction of movement. In these countries, we're talking about a high increase in tourism sector. You know that they have very good vaccination rates. Africa, we've lagged. We're still playing below 25%, which is unfortunate. But as it picks up, the global travels pick up, and tourism will pick up across the region. Locally here, there was a survey that was conducted by CBK last month, and we've seen that there has been improvement. There was uptake in bed occupancy. We are at 54%, according to the survey, compared to last year around April, when it was about 9%. We know very well that hotels depend heavily on conferences and such engagements to be able to drive businesses. But unfortunately, last year it was not there. We are still seeing a recovery on that front, but unfortunately we still have very large digital and virtual meetings that are going on. So along the way, we hope that as the economies open up, then that will be able to peak, and these hotels will be able to recover better. 54%
bed occupancy. That's some good performance. But where are these tourists coming from? Are they local? Are they international? Do we have new markets? Where are they coming from?
So far, it has been local tourism. So far, there have been very good deals being given by this international hotel, 5-star. So if you've never been to a 5-star hotel, maybe you're too late to go, but they still have very good deals on that. We've seen a little bit of inflow from America and Europe. Unfortunately, again, we did have some security alerts a few weeks, last week. Last week. Those are the negative things that we're seeing in this front. Again, you're coming to a political year. You'll continue seeing a little bit of red alerts on that. But I think Kenya, we are still as peaceful as always been on a political year. So we hope that tourism will continue to pick. The other thing we've seen, again, unfortunately, as per Q3 2021, the contribution to the GDP slowed down. Normally, we are at about 1.2% in terms of accommodation and hospitality, in terms of contribution to the GDP. Right now, as per Q3, we were at 0.5%. So hopefully, there'll be turnaround on that. Unemployment, the survey, again, I'll refer back to the survey by CBK. They say that of their normal staff pre-COVID staff capacity, they're at 85%, which is a very positive thing, especially in the coastal region. Meaning that there'll be increase on consumption, considering that these guys will be paid salary, meaning that even the local economies will be jump-started, considering, again, these are the people who spend money in those economies. So these are positive news for help. Different reviews in terms of recovery. I can say that Some people feel like 2022 is a year for recovery, but with the rate of vaccination, and I'm talking about global here, the rate of vaccination is still slow, and especially for Africa. So most experts and analysts preview that 100% recovery to pre-COVID eras will be seen in 2024, 2025. So we still have a little bit of a long way to go.
This is not necessarily because of the new COVID variants, but merely because of slow vaccination rates.
We've seen the vaccination improving. We've seen border restriction being loosened, movement being loosened. So we hopefully by 2023, 2024, all these things will be dropped. We've seen countries dropping the mandatory masking requirement. We've seen some countries starting to market their countries. If you look at Europe, Spain, and such countries, they've gone overboard in terms of marketing. So we hope that positive things happen. International sports have been activated. We are just coming from AFCON, African Cup of Nations. We've seen World Cup will be happening the end of this year. We've seen the Winter Olympics. So those are some of the things that we look at in terms of to see how international travel will be and how tourism will pick up across the globe.
Yeah. Does the recovery in the tourism sector then therefore point to perhaps a 360-degree turnaround of our economy in terms of a full recovery from the COVID-19 pandemic?
It brings in a very big factor into the recovery of the economy. Remember that if we get tourism, we get foreign exchange. If we get foreign exchange, we get a little bit of stable dollar. So those are positive things. It jumpstarts our hotel industries, and even you and I will be able to benefit, considering that any inflows in terms of seminars, conferences that come into this country puts money into the local hands. So it has a very big impact on overall economic growth.
So we expect some multiply effect of sorts.
We do expect multiply effect.
Is the forex that we are going to get from these tourism figures going to help us to sustain the currency much better?
It does play an important factor. Remember that tourism is one of the key forex revenue generators in this country.
Yes.
It's a one-way ticket compared to others where it's a two-way ticket. If you look at it, unfortunately, we haven't developed some areas which we can develop very well, especially when you look at medical tourism. The good thing about it is we've seen the government working towards that. We have the Kenyatta University Referral Hospital, which is supposed to be a regional hospital, which will attract medical tourism and also help curtail medical tourism out of the country into the countries where guys were going to get medical assistance. So when we improve that, then we'll see a little bit of influx.
When you say regional, you mean it's supposed to be bigger than KNH, so to speak?
Yes, not bigger than KNH, but they've put in infrastructure to be able to supplement what Kenyatta National Hospital is doing.
Yeah, I mean, I'm asking that because there are patients who go to KU and they are being referred to KNH, and not necessarily because they lack the equipment, but because they lack the resource persons.
The good thing about it is that KNH still reads in the region. So whether you have modern equipment, you still have to go to, like you said, to chill with the big boys.
All right, okay. Is the world finally decided to just live with Corona, and perhaps then that means tourism will never see the days of 2020 again?
Hopefully, basically the world is adjusting towards living in the Corona. We've seen the most taunted Omicron hasn't had drastic effect like the other Delta variant had. There has been high infection, but the good thing is not very many hospitalization or fatality effect. So slowly we are coming to adjust and accept that COVID is here. So there are countries that have already said that it now becomes not a government requirement, but your own personal requirement to be able to take care of yourself. So those are some of the things that will be able to let people live with COVID globally.
So in simple terms, it has ceased from being a pandemic to a normal health concern like a flu.
Until WHO says that, then we might not be able to confirm the flu bit.
Until WHO says so. Bed occupancy, from the reports I have looked at, bed occupancy in Mombasa seems to be higher than bed occupancy in Nairobi. For some reason, Mombasa is performing much better than the Nairobi figures. Now, why would the sector perform much better at the coast as opposed to here?
If you're looking at the same report that I was looking at, you'll tend to see that it's a seasonal effect. And the report indicated that December was better than November in Mombasa, and for Nairobi, they got a beating. The reason is most of us don't spend holidays in Nairobi. We tend to move out. We tend to move out of town. Mombasa being one of the favorite spots. Remember, Mombasa again did a very good job in marketing and giving discounts to domestic tourists to go and visit those areas. So that is the reason why Mombasa performed better than Nairobi. But if you look at it at the end of the day, when you start looking at when the businesses start to peak, then Nairobi will be able to peak better than these other regions.
Yeah.
Yes.
And Nairobi is usually better priced, in fact, if you ask me. But now, there are few friends of mine with good offers to buy some boutique hotels in Mombasa, Nyali and Mtwapa. And when these figures came out and they saw Mombasa is leading in terms of bed occupancy, they were excited about the idea of acquiring these hotels. What would you tell them? It
is a positive investment, though it comes with a little bit of risk.
No, what's
it is risk? A positive risk. It's a seasonal business. Number one, most of the time Mombasa is slowed down between January and July. It starts peaking in July as it goes up. Reason being that when these countries are in summer holidays, that's when most of those people travel to African countries.
So that is the international market.
Yes, the international
But the local market is not.
The local market, same thing. Remember that we still have to depend on school holidays. You and I do not travel to this thing unless we are sent by our employers. But when the school holidays are then, that's when we take our leave so that we can go spend with our kids.
But the employers do send people across the year for trainings, research in my case.
But again, yes, that is true. But there's also the factor that most employers will want to minimize on the cost than spend it on the way you will spend on your holiday. Then number three, let's not forget that we still have a political dilemma in some regions in this country, and especially with regards to the security. And then finally, there's something called Airbnb, which is giving one-on-one competition to these hotels. Most people who are backpacking or people who are just coming for holidays might tend to prefer to sleep in Airbnb, considering that the transit period where they move from one town to another is a very big factor in cost management compared to staying in these hotels. So those are some of the things that your friends need to look at in terms of trends.
Yeah, Airbnb in particular is something that I'd really love us to have a look at keenly. It's giving a beating to your traditional hotel business. Of course, I have tried one, and I went away with a skin disease, and I said never again. But it is, I mean, my case is not across board. Isn't it giving a beating to the tourism, your traditional tourism?
Maybe you're the one who took the skin disease there, but anyway. So the thing is that there are standards for hotels, and that's why it makes it pricey. Because they have to maintain those 5-star, 3-star levels for them to be internationally recognized. So that is where now the pricing factor comes in. Another thing is that look at the operational cost for hotels. You have to be catered for. There are very many factors which are not in the Airbnb sector. That's the reason why the government has come and said that you guys are the sector is growing, Airbnb sector is growing. We want to tax it because it has a very big business on that front.
It's booming.
It is booming. So again, it's going to give hotels one-on-one competition. That is not a lie.
Airbnb is not, properly registered. We are not getting enough data from there. We do not know the bed occupancy for some of these areas. And so is it possible then that tourism has picked up, but there is a shared revenue between your traditional and the new tech business?
Definitely there is. Definitely there is. That is something I can state with strong confidence. There is. One thing is that not everybody who does Airbnb are in Airbnb. Number
Correct.
One.
Yeah.
Not everybody who Airbnb data is very hard to get. Unfortunately, hopefully, we'll be able to extract data so that we can compare with the normal bed capacity. There are hotels especially out of Nairobi, who are now trying to structure and also log into the Airbnb platform, so that they can be able to. So those are some of the factors that we'll be able to see.
All right, we have to take a break and perhaps just take stock of the conversation we've had. Airbnb is giving traditional hotels a run for their money, and it's an interesting place to invest. I'm also told that if I have an opportunity to invest in a hotel in Mombasa, it's a great opportunity, but I should consider the fact that throughout the year, the business may not be as good as from July moving to December. Let's take a break. When we come back, we are going to discuss TPS Serena, we are going to discuss KQ, and we are going to close it with our expectations moving forward. Don't go away.